nice car.
Thanks, boss.
Can I get some change, please?
What's up?
Can I get some change?
Oh no, mister, I don't have change on me.
Oh.
Wait, you take Visa?
Yeah.
I'm just kidding, guys. This is episode 18, Chevron. Show the logo, bro. Come on. What kind of videographer are you, bro? Guys, Chevron pays 5% dividend yield. Made $110 billion in the last 12 trailing months. $15 billion EBITDA. In October, I lost I didn't lose. I was down $15,000. I kept doubling down, averaging down with options, and I made $22,000 in November, which means $7,000 profit. I recovered all my losses and then some. This was a really big hit for me, and let's take a ride, and I'm going to tell you a little bit more in detail about it. So as you guys can see, I finally got a cameraman. It took me 6 months, and I just hit my head here. It took me 6 months, guys, finally. And I'm also learning how to look in the camera lens. That's also took me, another 5 months? But yeah, going forward, I might have a cameraman as Adolf or somebody else, my buddy Adolf, if he wants to help me out, that'd be good. If not, we need to hire one of these fancy videographers and stuff. But anyway, this episode is about Chevron. Let me reiterate what I've just said. Chevron took a huge hit the third quarter of 2020. Chevron took a huge hit, and for the first time they had a huge loss. There was a 12 cents a share loss because of a one-time write-off and some foreign currency exchanges, because it's a multinational, so they have a lot of upstream businesses overseas. So when they convert it back to US dollars, they take a hit. But still, Chevron is a great buy in my opinion. It pays 5% a year. Instead of having your money in the bank, you can just put it in Chevron stock. Who cares what it does? It gives you 5% a year, and even throughout recession, they keep raising it. So I want to say this to all the traders and all the aspiring investors, portfolio managers. It's wrong when people say averaging down is bad. That's not true. Averaging down, if you know how to do it, it's one of the best things in the world, because if you're averaging down on a stock that's let me go the other way. It's freaking traffic here. If you're averaging down on a company that is going to recover, and if you don't know if it's going to recover or not, just buy companies that are above $100 billion market cap, then you'll be fine. But if you're buying garbage like JCPenney and all these stocks that Macy's, that might be gone tomorrow, then you should not be throwing good money after bad. Sometimes there are outliers like GameStop. Did you guys see what happened to GameStop? It went up like 700% in a week. So it went from $20 to $220, and I'll shoot another video on that. What I'm saying is, be smart, have common sense, know what stocks you're averaging down on. I don't care about buying Chevron and Walmart every time they go down. I don't give a damn. I'll sell my grandmother's underwear and put it on Chevron and IBM and all the companies that have been here like 50 years or more. But you gotta know how to do it. You gotta double down at the right pivot points with the right, I call it Martingale Strategy. And if you take my courses, I go step by step. I tell you exactly how to do this, so that when the reversal happens, boom, you recover. $3,000 profit one day, $4,000 profit the second day. It just keeps coming back. But until you hit that point, it's a lot of pain. When your stock keeps sliding down and you're like, what am I doing wrong? You're not doing anything wrong. It's just the entire market is selling off, so your stock's going down with it. Sometimes that's the reason. So you gotta do statistical analysis to know how much further your stock is gonna keep going down based on historicals. Boom, short and sweet, episode 18. DJ, spin that shit. Turn this off. We're done.